Who is this video for? In simple terms, why would you want to learn it to read a chart like this and use a chart like this over a traditional chart like this? Now quickly as to who I am, I'm actually a day trader who primarily trades Bitcoin, looks at the ES, looks at DXY, also most of the altcoins in this space. I'm also a trader who primarily focuses on statistic gathering, non-fundamental data, so no fundamental data at all, and purely technical analysis. So back to the initial question of why would you want to learn to read a chart more like this over here compared to a chart like this, which is a traditional candlestick chart, which is really simply, look at this chart, you're getting simply your open, high, low, close, which alone in itself is actually quite important, to be honest with you. Let's maximize this, which, yeah, it can provide you with some decent information and into terms of, okay, where buyers buying, selling, etc. But if you want to dive deeper into, day trading, all of that type of thing, I would really suggest looking at more so an order flow chart as to this aspect, showing you where the market buys are, the market sells are within a specific candle. It's almost like X-ray vision when going into looking at the, the open, high, low, close of these traditional candlestick charts. So let's dive a little deeper into this template alone. By the way, for anyone interested using Exocharts, so go give that a look up if you don't know about it already. This template here is literally showing us here a candlestick. This is representative of your typical open, high, low, close, templates, nothing too out of the ordinary there. But if you look here, you can see on the left hand side, you've got your market sells at a price level, and the right hand side, you've got your market buys. These are really simply the way you want to treat it. You've got market sells on the left, market buys on the right. That is what this is showing you, nothing out of the ordinary, to be honest with you. So that is that part out of the way. Now the tempo of this video has already been really quite quick, so let me slow it down a bit for you here. Within this template here, within TradingView at least, you can see the candlesticks here, open, high, low, close, as you typically would see within a traditional candlestick chart. However, you can't actually see, okay, are there any people buying at the top of this candle? Why are people buying at the top of the candle? Where are people selling at the bottom of a candle? Now, why is this important is the next crucial point, which I'm going to get to now. Now, you can see here on the right-hand side, I've actually got where all of my analysis is done. My analysis is primarily done through TradingView, right, where we actually have our higher time frame levels on the chart, and all this other stuff you can see with all this other stuff ranging from, fractals and naked point of controls, previous day levels, etc. Now, going back to my previous question as to why is this important now? Well, let's say we're coming into a level of support. Well, you don't want to see people selling down here at your very lows, because if you're seeing people selling into your support level where you should be really buying, that's actually ultimately very stupid and silly people. So essentially, this is what this template here is going to tell us here. So if we go back to it here, this will basically tell us, okay, are people buying or selling into our level of support? Is it a strong move into our level of support? And I'm going to break that down for you now in the other questions that you might have regarding all of this stuff at the bottom here. So essentially, let's start with the bottom stuff at the bottom here. So you've obviously got open interest. You can see the tags at the left hand side, open interest. You've got your footprint bar statistics here. You've got your visible line range data here. And in simple terms, let's start from top to bottom. Let's go in chronological order, as I like to do, which essentially here, this line is, I'm going to keep it very, very simple for you. Treat this as aggressive buyers and sellers. Okay, so let's just give you an example here. Okay, so a quick example of CVD divergences here. This is like a very basic scenario that you're going to probably experience. So if you're new to this, don't really be too surprised. But you can see here, you've got your initial low on the chart, and look at this. So we're going to view this as aggressive selling coming into our level, like the amount, you got this amount of selling coming into it. But hold on, look over here. You've made a higher low in terms of, look at this, the price movement. But the actual CVD, meaning the amount of aggressive selling going on, is more. So you've got more aggressive selling going on here than you do here. Yet price is still making a higher low, i.e. holding up. Now, for those more experienced traders, this is kind of why I don't want to say I view heat maps as redundant. But essentially, I don't really like heat maps. If I'm going to be scalping or looking for day trades, I really am a big fan of CVD. If not, I do still use the DOM. I guess you can use the DOM for other really important if you're really a big scalper. But essentially, what this is showing us here is that we've got more aggressive selling coming in here than here, but price isn't able to move down. So clearly that's showing that someone is actually holding up price. So rather than actually using a heat map for such data, I guess this right here is going to give it to us right off the bat. And essentially here you can say to yourself, okay, price isn't moving down. And what happens after that? Price moves up there. And obviously within this period of time here, you've probably got people selling, aggressively selling, scared at the low. Well, why would you do that? If you've got all the data here showing you, like I said here, the market buys and sells within the candles here coming in, and also the amount, how aggressive it is, the amount of aggressive selling coming in here compared to here, then you've got all the data there really at your tip of your fingertips, to be honest with you. Now, if we move on to the open interest aspect of things, which is actually, you can see this here, you've got a blue bar, red bar, it's just the way I've configured the colors to be. This is really simply, people get really confused with this. It's not too difficult. I could put some graphics maybe on the screen if I could be asked, to be honest. But essentially here, if you've got open interest going up, that technically means new positions coming into the market. If you've got open interest going down, that basically means people closing, right? So right here, for example, let's just pick an example. Open interest is going down, but price actually had a move down. What does that show? People are closing out of their positions. So it's not actually new shorts opening. It's just longs closing their positions. Okay, longs closing their positions, because when you get stopped out of a long, essentially you have to market short, essentially, don't you? So essentially, yeah, you can see there the difference between that, you know, open interest increasing, decreasing. Just pick another example here where you've actually got open interest is decreasing here. You can see red candle here. So open interest is decreasing. The amount of positions is actually exiting the market is going down, but you've actually got price moving up here. So this is, rather than we saw before, longs closing their positions by market shorting, essentially, this is actually shorts closing by market longing, because when you close your short, you essentially market long to cancel it out, right, or buy it out. So that's what this is showing to us here. So that's open interest, and you can use this to actually gather the characteristics of a certain move, because let's just pick an example for you now. Okay, so just a brief example here for you. You can see open interest is generally increasing, and there's actually other things you can add to this to make it more clearer to you, but this is just the way I like to run it for scalp trading. Open interest is increasing at this period in time here. So from here really up to here, but price is going down. So this is actually new shorts opening. So you've got people actively shorting the market. So you've got someone sitting there going market short, market short. This is not limit orders, and this is something I forgot to actually point out. This is purely market orders coming into the market. Okay, so nothing really, no limits at all that you see on heat maps or whatever. This is purely market orders. Now let me quickly break down the bottom part of this chart, which is actually called the footprints bar statistics. Ignore the name of it. I'm going to break you through the two most important things. Ignore the top line for now if you're new to this. The two here, which are simply your volume, which is actually the amount of market buys and sells combined, really coming into this candle will give you your volume. So if you add up all of these figures here, it's going to give you 23 million. Okay, and then you've got delta here, which is actually very, very simple. It's the difference between the market buys and market sells. So it will tell you, are there more people actively market selling within this candle? Yes or no? You know, like within this candle, if you've got, for example, let me come up with an example for you. So this is just a quick like visual explanation for you, I guess, like really simple text format. 30 million market buys within a candle and 20 million market sells. That's going to give you an overall delta of positive 10 million. So it's literally, because there's obviously 10 million more market buys, so that's the difference there. So if I give you another example, is if we had 30 million market sells and 20 million market buys, well, that's going to give you a delta of minus 10 million, and that's what actually corresponds to this bottom figure down here. You can see minus 753k. So it's a difference between the market sells and buys within the candle. And just as a reminder to that, the actual values there are market buys on the right, market sells on the left. So green on the right, red on the left. So of course, just as a quick reminder, now you can use that all in kind of combination with each other, you know, the open interest and the delta together, the candlestick open, high, low, and close, which I said before is somewhat still important, to be honest, within this. But you can obviously also use the actual data coming in between market buys, sells, open interest, delta, volume, all of that stuff really broken down now into this like 5-minute format. I guess you can just have another look back at it. Okay, so let me just give you a really quick example of actually how I use this data to actually take a potential trade setup sometimes. So the way I'm using this is I'll obviously have all my levels on TradingView, for example. I'm not going to really bullshit you here and be like, yeah, I've got tons of levels here, but there was a naked point of control here on the monthly. Of course, I'll go through this in another video or whatever. But you have a level of support down here, and you can see it's actually your range low at the point. So it's down here. You can say it's your range low. So you've come down here, and I'm looking over here at this regular, you know, the chart I've just gone through here. So this is it. So you're coming down here. Look at this. You come into your level of support, for example. This is the exact moment in time, by the way. Check the timestamps on the dates. Look at this. So you've got actually negative delta coming in here. So like, remember what I said, this is actually new shorts coming in because open interest is also increasing. So you've got people newly shorting into this level. And then what you can do then is go into the much lower time frame and say, okay, are we moving away from where these shorts entered? Because if we are, like we did here, right this moment here, as soon as you see all these shorts underwater, boom, you pull your trigger and that's it. You'll market long from that point onwards with your invalidation below low. And what happens there? You get like a really nice rise to the upside. So I hope you all enjoyed the first video. It's going to be much more complex stuff coming from me in the future. Live trade examples, you know, previous trade rooms we've done, which we do at tauruscrypto.com. My private one-to-one sessions, I might publish some of those ones. Check out exocharts.com. All links will be in the description below. For live trading rooms, etc., check out Taurus Crypto. Leave a comment down below, and I hope you all enjoyed. I'll catch you later. Bye.